Hey everyone, I am super excited. I went to Blog World, as you know, a few weeks ago and had the privilege of meeting the author of Laughing at Wall Street. And I was so excited to hear, Chris, that you were #2 on Amazon during your launch week. That's amazing. So many authors aspire to be on the top charts. This is incredible.
Thank you so much. You know, I wanted that #1 slot, even if it was only for a day or two, but Dave Ramsey was up there, and I could not get on top of Dave Ramsey for that #1 slot. But it was exciting to see it up at #2.
You could see my brainstorming that I did reading this book. I stayed up for 2 days, just enthralled with the information. I couldn't believe that he actually legitimized monetizing social media. So I'm going to let him get into it. Chris, thank you for spending time with TechZulu. We are really excited to learn your insider secrets of how to invest in the stock market.
Thank you, Esprit. I appreciate it. Well, you know, Laughing at Wall Street is the story of how I turned $20,000 into over $2 million over 3.5 years. Primarily by just identifying trends on the street and trends I found on Facebook before those on Wall Street could, and how to monetize those trends through investing.
Right.
The story really is, you know, everyone.
Which is unbelievable, by the way.
Thank you, thank you. It was a fun 3.5 years during that period. But you know, everyone wants to know how to invest. You know, how to invest in stocks for beginners. That's a big topic. You know, everyone wants to know how to invest in the stock market.
Right.
And when I was a beginner, I was just a teenager, wasn't really looking to become an investor.
Right.
I was at 7-Eleven. I would actually do garage selling on weekends. I used to buy stuff and then resell it to antique dealers, and that's kind of how I made money as a kid on the weekends. But I'd always start my day off with a bottle of Snapple. And one morning I was in 7-Eleven, and the store only had half of one refrigerator door of Snapple.
Right. I remember this from your book. This is so cool.
That's like a lot of shelf space today, but back in the late 80s when Snapple first came out, they generally had 2 full refrigerator doors at every 7-Eleven. So I spoke to the clerk and I said, hey, why don't you have my favorite flavor? What's going on? Where's all the Snapple? And he said, well, there's so many other brands now that 7-Eleven decided to cut back on the shelf space for Snapple, so we carry less flavors. So I went home, I talked to my older brother, who's a stockbroker, and I said, listen, this can't be good for Snapple, right? Can I make money off this?
Yeah.
And he said, well, if Wall Street hadn't picked up on what you picked up on, you could. And he helped me basically short Snapple through what's called a put option.
Right.
And I made in just 3 or 4 days as a teenager, I tripled my money. And that's when I was hooked, because I realized as a kid that if I was able to identify something on the street that would affect a publicly traded company's sales or earnings, if in the event that Wall Street and the investing public at large had not picked up on that yet, I had the opportunity to make money, and it's that simple. So,
but the cool thing is, I just want to interject that you don't need an expert like your brother to make money, and that's what you teach us in this book, which was so cool.
That's right. There are some very simple things you need to understand in terms of how to mechanically buy stock in a company and sell stock in a company, and how to leverage your money that I teach in the book. It's simple. You don't need a financial background.
So, and we're going to get into that a little bit later in this interview.
Yes. Yes, absolutely.
Yeah.
So, you know, ultimately, what do people want to know? They want to know how to invest, how to invest money. And if you want to know how to invest, you first have, before you start looking for stocks to invest in, you have to understand how to compartmentalize your money. This is the most important thing for the regular.
This is my favorite thing, by the way, from your book.
Well, it is. If you don't get this down, nothing else matters, because you can read my book, and if you can find the greatest stock in the world, you won't make enough money, because you'll be afraid to make that investment.
I mean, you essentially take the risk out of investing, which is so cool.
That's right, because, you know, over 3.5 years, I turned $20,000 into over $2 million.
Yeah.
That's 100 times your money. You'll never take the risk out of investing, but what you can do is compartmentalize that risk.
Yeah.
So what I teach,
and you did that when all the top stockbrokers were all failing. Can you get into that?
That's right. Well, this is the worst recession we've had in 70, 80 years, right? The stock market, went down 30, 40% over that period. yet I was up 100-fold in my money.
Amazing.
And the reason why I was able to do that is I use leverage investments, which is generally very risky. But if you learn to compartmentalize your money, your finances, and to have what I call a big money account, a big money account is money you're not afraid to lose.
Yeah.
Well, how do we find money that we're not afraid to lose? Most of us can barely afford to pay our bills, right?
Totally.
Well, here's the thing. We all have a floor on how frugal we're willing to be in our life. Because at the end of the day, you might clip a $10 coupon or a $3 coupon, but you're not going to clip a 25-cent coupon. It's just not worth your time, right? Well, what if that 25 cents was $25? All of a sudden, you might start clipping 25-cent coupons, right?
True.
Now, you might not want to wait another 8 months to buy that big screen TV because you know it will go on sale in 8 months. You'll save a couple $100. That might not be worth your time.
Right.
But what if that $200 was $20,000? You might now be willing to wait 8 months to buy that TV. So the concept is, if you view every dollar as its full potential of $100, all of a sudden these savings opportunities in your life become much more valuable.
That Starbucks coffee doesn't look as delicious.
That's right. So the money that goes into your big money investing account is money that you never would have had in the first place, that you simply saved because you viewed that dollar as $100. You viewed that 25-cent coupon as a $25 coupon. So you get your haircut every 4 weeks, maybe you get your haircut every 5 weeks. The money you save goes into your big money investing account. So when you find that big investing opportunity, the money that you use to pull the trigger on that leverage investment, that risky investment, is the money that comes out of your big money account. It's money that was never yours in the first place. I call it other people's money, right?
That's awesome.
And that's the money that I use to grow into $2 million.
And it doesn't necessarily mean money from investors.
That's right. No. It's not other people's money. It's your money, but it's money that you saved by getting your hair cut less often, or waiting another few months to buy that TV, or clipping an extra coupon, right? So it's really important for you to understand that you need to set aside different money to have a big money account. That's a difference between rich people and poor people. Rich people generally have extra money to take leverage and make leverage investments. The rest of us don't. So we have to trick ourselves into separating out a different type of account, a big money account, specifically to make the types of investments that people with money can afford to make, but we generally can't. Does that make sense?
Yeah, it totally makes sense.
Great.
And we're speaking to entrepreneurs. We understand that they take a lot of risks in their lives. They don't need necessarily another risk going on. So we're going to show them how to make it happen so that they don't have to feel like they're going broke and risking everything they have.
I'm an entrepreneur too. I start companies, and that's all fun, and we always hope that that's going to end up in a good place. The bottom line is, you can only do so much of that, and that's a really hard thing to do. This is something you should do in addition to being an entrepreneur, in addition to starting your own company. If you're able to find the next big thing that someone else happens to be starting, maybe it's Steve Jobs, 10 years ago, you can leverage your money in their big idea too. That's what investing is. It's kind of spreading the opportunity.
Totally. And being entrepreneurs, we're the influence. We know we're the alpha users of what the next big thing is going to be. And then you talk about also Facebook and how just being in our own Facebook accounts, we're able to know. It's amazing, the perspective.
That's right. And I'll get to Facebook in a second, because what I'm going to talk about is how to invest in stocks. And we all want to know how to buy stock. And that's the big question. How to buy stock, how to sell stock, when do I buy, when do I sell? Well, you purchase or you enter an investment, You initiate a stock investment when you have determined that you know something, you found something about a company that would materially impact that company's sales or earnings, that Wall Street and the investing public at large has not picked up on yet. For example, let's say you went to see this movie. It's called Avatar. It's the first ever 3D movie. You walk out of the theater and you think, wow, I just witnessed the future of filmed entertainment. This is going to be huge.
Totally.
Well, we all thought that to some extent, but how many of us walked out of that theater and thought, hey, I used to go to an IMAX theater once every couple of years for a weird movie,
Right.
But 3D films, I could see myself going to an IMAX 2 or 3 times a year now with these 3D films, because that's the best way to see them, right?
Totally.
Could that have a huge impact on IMAX, the company, right?
Yeah.
It absolutely could, and it did. And if you would have made an investment in IMAX the day you walked out of that film Avatar,
right.
IMAX went up exponentially in the 6 months after
Yeah.
Avatar, right? It took Wall Street a long time to piece that together. So
Right.
my book teaches you how to retrain your mind
Yeah.
to see your world differently, to start identifying those things that you see on the street and how to correlate those things to potential investments and how to determine if what you see as an ordinary person on the street
Right.
could correlate to an investing opportunity in a publicly traded stock.
Right.
That is the key. When
So
do you
awesome.
sell that stock? Well, you sell that stock or you exit the investment the second Wall Street or the investing public at large has determined that what you had seen months earlier
Right.
to be fact, right? As
Right,
soon as
right,
they
right.
figure out what you figured out months earlier, that you get out of that investment, whether you've made money, lost money, regardless. It's a very simple formula.
And you teach the formula so that it's very safe for us to understand your principles on how to get in and how to get out.
That's right. So, if you want to know what are good stocks, how to invest in the stock market, and how to buy these stocks, or how to buy stocks in general, what I tend to focus on is female and youth-oriented trends. All right. The reason why I focus on female and youth-oriented trends, hey, when I was buying and selling stuff at garage sales as a kid, I was focusing on male-oriented products like train sets and baseball cards. Why? Because most of the people setting the prices at estate sales happen to be women. And they would often misprice male-oriented products that were selling. So I would buy these male-oriented products because they didn't really understand them, right? They were perfect at pricing jewelry and dishes and antiques and stuff like that, and the sterling silver. But when it came to a Lionel train set, they would never know how to price it appropriately. So with investing, I do the opposite. Wall Street is primarily a male-run industry in cosmopolitan areas, right? So I tend to focus on female and youth-oriented trends because Wall Street tends to, in general, be late to pick up on those trends. So there's more opportunities focusing on those trends. True Religion jeans, Uggs boots, Crocs, right?
Totally.
All these things. The dress that Michelle Obama wore on Jay Leno a couple of years back, that J. Crew dress, had a huge, huge impact on J. Crew's sales. And J. Crew's stock went through the roof in the 6 months following that period. It was on the front of every magazine cover, on the front of every tabloid magazine. Well, Wall Street doesn't read tabloid magazines. They generally read the Wall Street Journal. So it wasn't until J. Crew came out and said, hey, we had a great quarter in terms of our earnings, and part of that was due to Michelle Obama bringing new people into our brand. Well, we all saw her on Jay Leno. I did, okay?
Yeah.
Tabloid. I had Us Weekly on my counter at home. I didn't make that investment. I missed it. It blew right over my head.
I remember reading that.
Millions of people. It blew over our head. Why? I still miss many more investment opportunities than I catch. So
I can tell you this to back up even your J. Crew. I know my friend owns a hula hoop company. Michelle Obama was hula hooping, and her sales skyrocketed.
There you go.
Yeah.
There you go. It really is that simple.
Yeah.
So it's just important to remember the best way to invest money is to believe in what you see as an ordinary person, right? It's to open your eyes and live life. Facebook. Really big. Facebook, Facebook is a window into life, right?
Yeah.
Except, I look out the window and I have a very limited little view of what's happening in life, right? Facebook, you have a really broad view through hundreds, thousands of people that are sharing their experiences, what's hot, what's not, what they're doing that day. I made an investment in a children's show before I had kids called Chuggington because one of my friend's wives was talking about how her twin kids were silent for an hour and a half that morning, and they're never silent because they were watching this new show. And it's the craziest show ever. They've never been so into a television show. All of her mom friends were chiming in on Facebook. Same thing with my kids. They're silent. I've never seen them act like this. Well, I saw that on Facebook and said, I got to look into this. It was a really small company out of the UK that was producing this show, just got a deal with the Disney company, ended up blowing up. I made the investment in it the day the show was released, which was weeks and months before Wall Street really started to pick up on how big the show was going to be in the US, right? And I discovered that on Facebook. You can discover stuff on Facebook every day, trends before the Wall Street Journal starts to write about those trends, right?
I mean, let's just really think about this. Facebook isn't just a place to message friends or to post photos. It's a moneymaker if you look at it through a different set of eyes.
That's right. And I don't just use Facebook to identify trends. I use Facebook to conduct my due diligence on what I think
loved that,
my own neighborhood. So yeah, you might see something in your own hometown like, wow, this store they opened up here, this restaurant, this new chain restaurant is packed. But is it just your neighborhood, or is it around the country that's happening?
Totally.
So you get on Facebook and say, hey, are y'all been to the mall the last week? If have you seen a crowd at this particular store? No, my big investment in 2011 was in Target the day the Missoni line was launched, 400 pieces from Italian designer Missoni. I was at Target in my hometown, and I waited an hour and a half to get in, and an hour and a half later, all 400 pieces were sold out. So I'm on Twitter, right?
Yeah.
And I'm reading, blogs and realizing that around the country, people are tweeting, yeah, I'm in Target, they're completely sold out.
Right.
So in 10 minutes, I knew that Target was sold out of a 400-piece line, right?
Right,
so
right.
I was making an investment, a leverage investment in Target that day, and it took Wall Street 4 or 5 hours to start writing about that. The next morning, it was on the Today Show. It was all over CNBC. But that 4-hour window is all I needed to double my money in 24 hours off of something that I saw in real time and was able to verify leveraging social media channels.
And you also provide in your book the formula to know when to sell, when to get out.
That's right. Yeah. That's right. I teach you in my book, without any financial due diligence, anyone can do this, how to determine when the investing public at large and or Wall Street is what we call them, has figured out what you already figured out. I teach you how to determine that, because the second that happens is when you exit the investment. And that's one of the hardest things for people to learn, is when to sell an investment.
And I just want to reinforce, you really don't need a financial background to be able to do your style of investing. Is that
absolutely not? In fact, not having a financial background probably helps you. The more closely tuned you are into what's going on around you, eating at restaurants, reading tabloid magazines, if you watch a lot of TV and movies, and you're out and about and you have friends on Facebook and you're just tuned in to what's happening in everyday life, that is the biggest advantage that you can have. If you have access, if you are female, that's great. If you have access to females in your life, your wife, your girlfriend, coworkers, right? I get a lot of my investment tips from coworkers, children.
Totally.
That is a strategic advantage that you have over Wall Street, and one that you could leverage with my style of investing, which I call information arbitrage. You're just arbitraging information.
And what a great way to put money aside for your kids, to know that you could see trend spotting through your kids' eyes, and then you'll have money aside for them if they want to go to college or whatever their future plans are.
Absolutely. Listen, I turned $20,000 to $2 million, and on my website, laughingatwallstreet.com, I actually have an audit of my financials over that 3.5-year period that anyone can go view. It is actually an audit from, I think, 67,000 or 70,000 to 2.4 million roughly. But you can see audited results of my financials. Anybody can do this. Doesn't matter who you are. I don't work on Wall Street. Finance is not my job. I'm not a stockbroker. I would never invest other people's money.
But you did mention before that your brother was a stockbroker. So can you confirm, how does that not have anything to do with this style of investing?
Listen, I was a teenager when I made my first investment. I need someone to hold my hand and teach me the basics. I teach the basics in my book. One of the things I do is leverage my investments, because I only make, on average, one great investment a year. I teach you to look for one investment a year. This is not day trading. This is not, well, it's going to encompass my whole life. No, this is just living your life. And if you find one great investment a year, that's all you need over a 3, 4, 5-year period to make tremendous gains in terms of 50, 60, 100 times your money. You have to learn how to leverage your money. And I teach you how to do that in my book. It's a very simple methodology for doing it. You don't need a stockbroker. You can use a discount broker like E-Trade. You sign on. The next day you have an account.
And you show us how to do that.
Step by step. It's very simple. Do not be intimidated. If you want to start with $50, start with $50. Not the end of the world. You don't have to go all in.
And what I really liked about Chris when I met him at Blog World is I could tell, and I've read the book myself and just really enjoyed it, that he really created this in order to share his information. It's not a get-rich-quick scheme or something like that. I mean, literally, you could tell he's a good guy. You have a family, you have kids, and it's about really sharing this gold information that's helped you in your life?
I'll tell you what I want out of writing the book. Okay, authors, us authors really don't make a whole lot of money.
Totally, yeah.
And I don't. Right now, I have a partnership with First Book where every person that buys my book, at least to the end of the year, and I might extend it in perpetuity.
Yeah.
Every time I sell a book, I actually fund a kid's book for a child at the poverty level to try to eliminate children's illiteracy. I actually think I lose 23 cents every time someone buys my book because it costs me more to fund that book through my partnership with First Book. But what I want is for people like you to read my book, learn how to retrain their mind to see their world differently, start identifying trends on the street, and share those trends with me. Because if I can make one additional big investment a year because I have 10,000 people that think like I think, sharing what they see with me, I'll make a lot more. That could be an extra $3 or $4 million a year for me in my own personal portfolio.
That's fantastic.
So I want to increase my observational network of people that see their world like I see my world and are smart enough to identify a trend with a potential investment. So I have a lot to gain by having people embrace my methodology, share that methodology with me at laughingatwallstreet.com.
I mean, listen, if I save on getting a coffee in the morning and I'm able to turn that $5 into tens of thousands of dollars, I'm more than happy to share.
That's all that I ask. And if you share that with me, I'll share what I'm doing with you. And my goal is to establish a community of people that are sharing observations, and that becomes a very powerful asset, more powerful than any Wall Street firm, because together we'll have potentially tens of thousands of people around the world, every demographic, every type of person, different professional backgrounds. And what we see in real time is very powerful, right? It takes them months to get in the head of the consumer. We are the consumer, right? We know what trends are breaking as they break in real time. That's a really powerful asset, and it's one that I want to be at the forefront of.
That's a forum that I want to be a part of for sure. Will you talk a little bit more about your nonprofit? The nonprofit you support.
Yeah, well, I was inspired by the Tom's model, right? And we all know the Tom's model. You buy a pair of Tom's shoes, and they send a pair of shoes overseas to a child in need. And I've always been really astonished at how powerful that model has been for Tom's shoes. I want to do the same thing for the publishing industry. So literacy is a huge problem. Most people don't realize that most of the kids at the poverty level don't own a single book of their own at their house.
That's crazy. I couldn't believe it when you told me that.
Can you imagine growing up not having one book that you own in your house? So the thought is, if all these kids can get to own one book in their house, that could mean the difference between them being literate and illiterate their entire life, right? So, every time someone buys my book, I'm buying a book for one of those kids in need through First Book, as long as I have this partnership. And I'm hopefully going to inspire other authors and publishers to run with this model, and together we can make sure that every single kid in the world has at least one book, just one book in their house. And that can make a huge impact on literacy, which, as you know, ultimately makes a difference in all other areas of life, right? That could set the tone for a successful person who could be the next Steve Jobs, right?
Totally. And where can we buy your book? Laughing at Wall Street.
Really anywhere. All the Barnes & Noble, Amazon, your local bookstore, a lot of indie bookstores. But listen, it will always be on Amazon, and I imagine it will always be on Barnes & Noble. If your store doesn't have it, ask for it. But please read it, share it with a friend, and interact with me. If you love the book, let me know. And join my community and start thinking, start observing your world, and sharing with me what you see. I'll share back with you what I see.
And by the way, I think I forgot to mention, Laughing at Wall Street is a book that Mark Victor Hansen, who wrote Chicken Soup for the Soul, he completely endorses it. You'll see it on the jacket cover. This is a book that really high-profile people respect and think it's the leading information in the space on how to invest money. Can we do a quick recap? Someone wants to pick up your book, wants to get started right now. They don't want to wait. They're on their way to the bookstore, but on the way to the bookstore, they're thinking, how do I start investing? What can they do?
Well, it's real simple. What do? You just live your life, right? Live your life, but start seeing your world through investing glasses is what I call them. So as you live your life and as you see things, for example, I don't know if you're familiar with Movember, this last month of November, all these guys wearing mustaches, right? It's going to be a big thing. I bet next year will be bigger than it was this year.
Right.
So next time you see something like that, you have to ask yourself, is there an investment behind this trend of guys wearing mustaches in the month of November, right? There's not, at least none that I could find.
Right.
But are you asking yourself every time you see something? Look, food trucks are getting real big, right? I went to LA for my book launch at Blog World, and I noticed all these food trucks are everywhere. You're watching TV shows, and they have food trucks on them. It's starting to hit B-tier cities. Is there an investing play? If food trucks take over the country, is there some publicly traded company that would benefit from that trend?
Like somebody who makes the food trucks or has to build the food trucks or,
Who knows? It could be any number of things. And I teach you in my book how to take that idea, that seed, and how to break it down and to determine what type of company would benefit, right? From that trend that you just spotted on the street. So it's just a different way of thinking. That's all it is. It's not doing research. It's not looking at stats or financials, right? You don't have to do any of that stuff. It's a different type of investing. It's different from what the guys on Wall Street do. But that's what gives us our advantage.
And as a final takeaway?
As a final takeaway, I would just say, listen, it's important to believe what you see, not what other people tell you to believe, right? You have to trust in your gut. That's how I did it. So don't worry about what you read in the financial papers or on financial networks. This is something that you should do and have fun with. That's a big thing. Have fun with it. I have an absolute blast at this, right? Every time I see something that I think could be an investment, I have a huge amount of fun researching it and determining if there's an investment behind what I saw on the street, right? So this is something to have fun with. It's a hobby. It's not a profession. It's not a career for me. It doesn't need to be a career for you either. It could just be the next new hobby that you enjoy doing. And it's the only hobby I know of where you can make a ton of money. I was able to retire, at least temporarily. Now I'm involved in other businesses I help start. But I was able to retire.
I think true business owners never stay retired, right?
And I'm not an old guy. So listen, it could happen to anyone.
Right. Fantastic. Well, thank you so much for your time, Chris. LaughingatWallStreet.com. I read the book. I loved the book. I thought it was amazing. I stayed up all night reading it. I really appreciate you taking the time to write it and share your insights with us.
I really appreciate that. Thank you.
All right. Bye, everyone.